Why are the stock prices failing? Do you need me to remind you of something in this stock market business? Yes, you do not panic. I really felt like I needed to remind you of that because emotion seems to be running high at this point in time. People are panic selling their great positions in the fear that it may get worse than it already is. In many of my videos, I remind you that investing in the stock market is a long-term plan. So why is there panic because of some volatility in the stock market? I do not see any reason to panic because as a long-term investor, you should not be bothered about what is happening right now if you choose your companies really well. Now, I'm not saying panicking is a bad thing, especially considering how the stocks have crashed and are still crashing. I'm only trying to act as the reminder that there is absolutely no need to panic. First, I believe the market crash of this year cannot get any worse than it already is. I also think the market is due for a correction. In fact, we are long overdue. The market and investors really need a breather at this point in time. I really think I'm making this video to prepare you for what may be a little pullback in the market. The earlier you know of this, the better you'll start preparing yourself. Also, an early knowledge will be sure to prevent you from making any moves due to panic or fear of how the stock market is turning out. Hello viewers, my name is Tony and I'm glad to be here once again. Like my other contents, this is going to be just as exciting. I have a channel on YouTube that contents relating to financial freedom, investments and business. There are also contents related to this video. So after knowing all this, the question is, wouldn't you want to subscribe to my channel? I also have a rapidly growing Facebook community which you can join by simply joining my Facebook page. By doing that, you'll have unlimited information about whatever is going on. Now, to the topic at hand. Let us look at these three top indexes: Dow Jones, S&P 500 and Nasdaq. In a single day during the week, Dow Jones went up by over 0.09%. The S&P went down by about 0.78% and the Nasdaq went down by about 2.46%. So what this means is that the speculative or high growth investors must have seen that time is a very bad time for them in the market. However, a dividend and conservative investor would have seen a very good time. There are a lot of things going on behind the scenes on the market. So as a high growth investor, you have to be ready for one thing: the high volatility of the market. Well, I want to share my ideas with you as to what I believe is going on here. First, why was the Dow Jones green at this time? And well, it's made up of many stocks and the general performances of these stocks determine how well will do. So the stock that did well overweight the ones that didn't do well, and that is why the Dow Jones is green for the meantime. The S&P index is also made up of different companies and the case is the same, but for the S&P, the companies in financials were trying to pull the index to the green side. For the tech company, we're weighting more to the red side, so we end up with red. Finally, the Nasdaq took the biggest hit that fateful day. Most of the companies that made up the Nasdaq index were tech companies and other stocks that took quite a hit. So the question is, what is really happening? My guess is that the stock market is undergoing what is called a sector rotation. A sector rotation is simply taking money from one sector to another sector and then using it to buy other stocks in a different sector. In fact, the high growth and the big companies have suffered the hits the most in the recent times. Most of the money is now being channeled towards the recovery stocks that were hit during the pandemic. This means that the stocks that fell during the past year due to the pandemic and subsequent lockdown are now rising, while the stocks that shot up during the time are now beginning to fall. This is a normal occurrence in the stock market. Money is moving from financials to tech and vice versa. And this is why I'm saying there is no need to panic. Now, volatility in the market is more amplified and the movement between the stocks have become more noticeable. This is why it is advisable to own stocks in different sectors of the market. It is sometimes called balancing your portfolio. Balancing your portfolio simply means that no matter how much the sector rotates, you will most likely still be in the green. As a smart investor, these types of days are days for investment. So you need to keep a keen eye for these sorts of opportunities. When you come through your watch list, you will definitely be able to identify those great stocks that are not doing too well. Buy them and watch them pick up again. Take a Facebook stocks for instance. It has been undervalued for a while, but investors have started buying back into the stocks because they cannot predict when it will rise again and they do not want to be caught unawares. So they have started buying the stocks and now Facebook stocks are beginning to recover. Obviously, last week it's been crazy, but I'm sure that will recover again. It will most likely play out across all the different stocks over the next few weeks. Now, this doesn't mean that every stocks will recover as quickly as Facebook, but you have to watch out for the ones with the potential too. And in conclusion, what I'll say, there are a lot of potential stocks out there. And the fact that the stocks are going down should be a great opportunity for a smart and a keen investor. So, invest wisely, be patient, and understand the stock investment should be a long-term plan. And don't forget, I'm not a financial advisor. These videos are only for entertainment purposes, sharing my opinion. And I will say, if this video taught you something new, please like it and share it. Also, drop your views and comments with us. I'd like to say a big thank you for spending time with me. And until next time, stay green and very motivated.